In Q2 of 2020, Warren Buffett sold out of all of his airline stocks. Many investors who follow Warren Buffett sold out as well or didn't buy into the airline stock industry, expecting that they missed something that Warren Buffett maybe saw. From this bottom of the airline stocks in Q2 of 2020, many of the stocks more than doubled in the past year, leaving many investors who followed Warren Buffett blindly missing out on doubling their money or selling at a loss at this exact point. In this video, we will discuss why Warren Buffett sold out of his airline stocks, why it was the right decision for him, but not necessarily the right decision for any other investor. And more importantly, why you should be more careful when you follow other investors into their investments. What's up, investors? Sneers here. In this channel, I cover everything about intelligent investing. I do that through concepts of investing as well as stock research. If you're interested in intelligent investing and want to see more content like that, please click the subscribe button as it helps me a lot and gives you more content for free about investing. With that said, let's go to the video. Following the super investors and gurus in the investing world is generally good advice that everyone should follow. Especially gurus like Warren Buffett, but not only have all of his investments in public through the Berkshire Hathaway company, but is also so kind to share with us details about the reasoning for his investments through his annual shareholder letters and through the Berkshire Hathaway annual meeting, where he answers questions for hours. And watching these videos of him answering questions and reading his letters is free masterclass for everyone about investing. Another aspect of following the super investors is doing that through the 13F filing with the SEC. The 13F filing is a regulatory requirement by the SEC for every investor from a certain size to publish what he invests in the American market. So you can see every 3 months for every super investor what they buy and what they sell in the American market. By the way, watch until this end of the video to get a special tip from me about following other investors and their 13F filings every 3 months. But following these filings blindly is not recommended, because often you can see what their investor is buying and selling, but you can't see the story behind it. You don't know the investor reasoning, you don't know his hedges through other options trading, for example, and you're missing a lot of the story. So these filings might give you a good idea and maybe spot some potential stocks that other super investors invest in, but just copying it blindly won't work for everyone. One such case is Warren Buffett selling out all of his airline stocks early in 2020. But in this case, we have a special peek into his thinking as he was asked about it in the annual meeting of Berkshire Hathaway, and he gave an interesting answer, which we will examine here in this video. In May 2020, it was published that Warren Buffett sold out of all of his airline stocks in what we now know is the absolute bottom price for these stocks. Following his sale, there was a lot of discussion around the internet and around other investors about his actions around the airline stocks. A lot of investors thought they might miss something that Warren Buffett saw, especially in the airline stocks, and therefore they followed him somewhat blindly into selling their holdings or not buying in, fearing that they missed something that this very smart guy did. And justifiably so. It's hard to go against the stream, and especially hard to go against Warren Buffett ideas. But selling at this point was a mistake for everyone who sold, because that was the absolute bottom. And for everyone who thought of getting into the airline stocks industry and didn't do it, they all missed out on more than doubling their money in the past year. Let's look at 2 examples. The first one, United Airlines. They went from $20 in May of 2020 to over $56 today, more than doubling their share price. The next example is American Airlines, going from the bottom of $9 per share to over $22 today, again more than doubling their share price. Guys, before we continue, if you like this kind of content and you want to see more investing content in your feed and you want to help me, please hit this like button, as it helps me a lot with the YouTube algorithm, and for me as a new YouTuber it's extra helping me, so thank you so much for doing it, and let's continue with the video. In the recent Berkshire Hathaway annual meeting, the first questions Warren Buffett received was about this selling of the airline stocks. He was asked specifically how come he went against his own advice of being greedy when others are fearful, and he was fearful when all the others were fearful as well, selling the stocks at the absolute bottom, even though at this point of time he already knew that there is a government plan to help all the airlines and stream money to them to keep their head above the water. So why did he sell? Let's listen to his answer.
The airline, it's kind of interesting with the airline businesses in particular, and then I'll get to what was done in fiscal and monetary policy. But we had a few people, various subsidiaries of Berkshire, that wanted to go in for help from the government. And in some cases, they had minority shareholders owned a few percent. And they said, well, this, we're going to get killed by what's happening with the regulations that are being put out, and we're stopping the economy. And they said, everybody's going in for them, and why don't we go in? I said, Berkshire can handle it. This is for people that can't handle what's happening, and so we're not applying. But the airlines were the most prominent beneficiaries of what took place immediately. They got $25 billion initially, most of which went to the big four airlines, and some of which went in as grants, not loans. Now, airlines operate in bankruptcy, so it isn't like that. Three of the four big ones went through bankruptcy and within the previous 10 or 15. So the airlines that were kind of used to operating in bankruptcy, they would have kept operating, but it was perfectly proper for the airlines to be helped. They went into the government. They needed government help, or they would go bankrupt, some of them. Really the Congress, but Steve Mnuchin too. They decided they deserved the help, which I do not quarrel with at all. But imagine if Berkshire was the 10% holder, which they had been, of everyone in the airlines. They said, take it up from Berkshire. I mean, it'd be like one of our, they might have very well had a very, very, very different result if they'd had a very, very, very rich shareholder that owned 8 or 9%. And they didn't have that, when they went in. So you might not have gotten the same result. In fact, I would think you probably wouldn't. I mean, I can just see the headlines now. I mean, because you've seen the headlines on some companies that took $100 million or $2, and really didn't need it, and some of them gave it back, and most of them gave it back. But you're actually looking at probably at a different result than if we'd kept our stock.
So as we heard, the main reason for Warren Buffett to sell out of his airline stocks was because if he holds the stocks, there will be a public outrage for him as one of the richest people on earth receiving government support for his holding in a company. So he wanted to avoid this public outrage, which would put all the airlines company in a very bad position. So when he sold the airline stocks, he left most of the holders to be the mutual funds, which by transition is the public through their 401ks and other measurements of holding the stocks. So there is more sense in the government giving money to the airlines to actually support the public without the outrage that would come if it was still Berkshire Hathaway, one of the most rich people on earth, holding the company. So if you looked at the airline stocks in May of 2020 and you took into account the government support that is coming, you might conclude rightfully that this is a good investment. It's currently undervalued to the amount it might be worth if the government support the companies through the time of the coronavirus. And this conclusion is absolutely right. But if you follow Warren Buffett and you might tell yourself, he knows something I don't because he sold out of all of his positions, you might miss out on this opportunity, which is not the right decision because Buffett sold for a decision that is only relevant for him and not relevant for anyone else. That doesn't mean that Warren Buffett's decision to sell was wrong when the decision for you to buy might be the right decision. It just means that everyone have different perspectives about the same stocks, and that's okay. That's the thing with individual investing. Many investing ideas might be right for some and wrong for others, and that's absolutely okay because it depends on your time horizon, on your competence in the field, on your risk tolerance, and many other variables. So when you look at a particular stock, consider your own situation before you're going in. Also consider that your situation might not be the same of another guru or another super investor. It's important to notice that when you look at what the gurus do every day with their investing, because you might miss really good investment ideas for you, or you might sell out of really good holdings following other investors. Now to the promised extra. Say you want to follow other investors, other super investors and gurus into their investing, and you want to do that as comfortably as possible. Reading the 13F filings from the SEC might be hard, and it's not very comfortable because this is just a regulatory filings that is not very readable for everyone. What I like to do is using a site called Datorama, which you can see right now on the screen. This site organizes the entire data in a very readable and easy to access way. It allows you to see every super investor's current holdings and what he did through history. So through every quarter of update, you can see what he bought into, more into the position, what is their new buys, what did he sell, and you can visualize his holdings in a more easy to access way, which is very helpful if you try to understand the story of the investment. Dataroma currently follows 72 super investors like Guy Spear, Monish Pabrai, Warren Buffett, Lee Lu, Bill Ackman. So these kind of names are household names if you like to follow great investors. So if you want to follow these guys, go to the site. I really recommend that. But again, remember the main point of this video. Don't follow the gurus blindly. Consider your situation. Consider that you don't know the full story behind each investor and his decisions. And think for yourself what is the best decision when you manage your portfolio. That's it, guys. I hope you enjoyed this video and it was helpful for you. If you want to see more investing content from me, don't forget to hit the subscribe button down below and also like this video to help me with the YouTube algorithm. And with that said, I hope I will see you in the next video. Bye bye.